Hey guys, happy Friday afternoon, TGIF, right? So I've been sharing a lot of market content these last couple of days, and I've had a couple of direct questions concerning the large amount of appreciation that we've seen here in the southern New Jersey region, and just how sustainable those numbers will be, especially since it's an extremely frustrating time to be a home buyer in today's markets with very low inventories and extremely competitive buying environment, especially if you're in a first-time home buyer type segment. So I'm Anthony Delicandro, Compass Real Estate here at the Shore. I'm going to share my screen and dive right into a few of the charts that I had shared to explain and hopefully make some quick work of this explanation. So join me. Here I shared this chart the other day, second quarter market stats for Atlantic County. We can see, as we know, no surprise, number of sales sharply off in the second quarter, largely impacted by the current pandemic that we're experiencing. Also, we can see a sharp decrease in the number of listings that were taken during the same period. So what was a bigger surprise to many is that median home sale price appreciated by 20% year over year for the second quarter. And so in as much as that's a big number, in past market reports that I've shared, I've taken a deeper step and approach and separated bank-owned sales from non-distressed sales, because there's a significant difference in how it impacts what we're experiencing as median home sale price. And what's more important in this, at this time as well, is as I move on to this next chart, there's been a lot of discussion in the industry about how we're experiencing greater affordability than we ever have, historically. Interest rates for the first time dropped below 3% in over 50 years. And so how does that impact the cost of houses today? This is a chart that was shared by Freddie Mac, where we can see what the interest rate has done over the course of the last couple of decades. A good portion of my career started in the 1990s. Interest rates were 8%, and I've joked with a lot of people that if somebody locked in an interest rate in the 90s during those years and you were in the 7% range or in the sevens at all, you were like the happiest and luckiest person of that you knew in your circle. It's extraordinary. Yet today, when you compare the same $300,000 loan, the overall monthly payment, or actually the principal and interest payment, is over $1,000 less per month. So insane what an impact and how much things have changed with regards to interest rates. Now as we move down, right, so we've had 20% appreciation, lowest interest rates historically. What does that mean in terms of overall payments? And this is what I wanted to kind of break down and explain, right? Because we're seeing, if we look back just over the last 3 years, interest rates just 2 years back in 2018, in July, were at 4.5%. Median home sale price in Atlantic County was at $172,000. That equated with a 10% down payment, that equated to a principal and interest payment of $784 a month. And we can see in this chart exactly what kind of changes the market has occurred and how that's impacted what the monthly cost of a home would be. We had a slight reduction in interest rates last year, yet another appreciation in terms of median home sale price. Payment went up a little bit. And then when we look in 2020, this year, we've got rates all the way down to 3%, maybe even a little lower in some circumstances, a big jump in median home sale price, and again, an increase in overall cost of the house. And so the question is like, why is the media talking about having lower overall cost of, costs to own a home today when we're experiencing kind of the opposite here in South Jersey? And so the next slide really tells that tale. It's a matter of what we've been experiencing with the volume of bank-owned sales and how they've impacted our market over the course of the last, not just 3 years, I'm just going to go back to these last 3 years, but really how it's impacted our market over the last 10 years. So I'm going to share this screen again and dive into this next slide here. This is a comparison for the second quarter of 2020 and what happened with median home sale price of bank-owned sales versus non-distressed sales, meaning sales that were not bank foreclosures, nor were they short sales, right? So that's the difference here. We saw, like we did in the market, a decline for the second quarter in overall number of sales, which is expected. again, largely due to the pandemic. We saw a much more modest appreciation, not a 20% appreciation, but a 13% appreciation year over year, up to just under $250,000 for non-distressed sales, right? When we look at what happened with bank-owned sales, we can see that there was a decline by 60% in terms of overall sale of bank-owned properties, right? In 2020, bank-owned sales represented just under 8% of all of total sales that closed in the second quarter, versus when we go back to 2019, bank-owned sales represented 12% of all sales that occurred. So what's happening here is, and we can see the significant difference in median home sale price of distressed homes, which are typically, not well maintained, etc. That's basically the story. We're going from where we reached, historically high levels back in 2016 and 17, where we were over 1 out of 4 homes was bank owned when it closed. Now we're all the way down in the single digits, just 8% this quarter, and a number that's continuing to decline. And what's happening is that's what's impacting overall, the large jumps in median home sale price that we're experiencing. Our region in southern New Jersey outperformed the rest of the country on its way down in 2012, 13, 14, 15, right? And now we're outperforming the rest of the country on the way back up in terms of appreciation, because we're just coming back into balance. A lot of those bank-owned assets have been sold, absorbed into the market. Prices are reaching more of a normalized level. And then I'm going to summarize that with one last chart, and we're going to see how does this impact pricing when we apply and just look at the non-distressed sales. We can see, instead of, in our first chart, right, we had prices going up each year based upon median home sale prices increasing. When we look at just non-distressed sales, we had prices drop, the monthly cost of a home decline from 2018 to 2019. And then we did have a rather large jump in 2020, largely, just a low inventory and a lot of demand because we have such low interest rates. So we did have a little bit of an increase year over year in terms of cost of housing, but much less than what we saw if we were looking at overall median. So that's what I would describe as my normalized explanation of making sense of where prices are. I know it's frustrating when you're a first-time home buyer and it seems like prices just keep getting higher and higher and higher. And I wanted to just put that into a little bit of perspective. We'll see 20% appreciation. Doesn't mean that the home that you're looking at is 20% higher than it was last year. That's simply not the case. Hopefully this explanation may help that make a little more sense for you. But the most important thing you can do today is just to be prepared for the competitiveness that we're experiencing in today's market right now, and wrap your head around the idea that, why prices are experiencing the jumps that they are, but long term, what's going to be the best decision for yourself and your family as you move forward, and are you buying the right house that's going to fit you down the line. So any questions about this or any other questions concerning your potential plans to buy or sell a home in 2020 or even 2021, don't hesitate to reach out. We hope that the information we provide is the most valuable that you're seeing today in this complicated market. Hope you have an extraordinary Friday, and any questions, be in communication. We'll be here. Looking forward to hearing from you. See you soon.